Hello and welcome to BQ Prime. I'm Hiral Dadia. Joining us on the show today is Rahul Jain, VP Research, IT at Dolat Capital joining in. Rahul, welcome to the show. And one stock that we want to discuss is with regards to TCS post the Q3 numbers. What do you make in terms of the headline numbers?
Yeah, thank you, Hiran.
Mhm.
From the TCS earnings, as we see, it's not much different than what we were thinking. I think from a growth point of view, it was slight beat to our estimates, but margin were broadly in line. I think there were more things that were said on the call which were more crucial than the number itself. So I think, as they say, that the devil lies in the detail. That's what the
Mm.
more result was about.
Right. So, what were the key takeaways according to you from the con call? Because clearly the numbers don't really point out to any negatives, at least from an outlook perspective.
Yeah, as we were thinking about this year right from the beginning, is that given the kind of a strong tailwind that we had from a very strong year in FY22 and those period of shortage of human workforce and all that. So we knew that this year would have the advantage of some very strong wins in the past. But the more evidence we need to collect is that what's the traction right now, which would probably give us indication how this calendar or this fiscal 24 is going to play out from. So from that perspective, if we pick up one or two aspects within the call, so I think their headcount number reduced on an overall basis, which is something which happened after more than 10
Mm.
quarters. So that was a number. Second thing is that they are saying that Europe continues to stay in the pain. UK also deal making is soft, but they are covering up with a better market share win in the vendor consolidation process. So those are the things. So out of three market crucial, two markets are in pain, and the US is the only market where they continue to see traction. So those were the things which were not giving enough confidence that why the next year should be as strong as we have seen in the recent past. So these are the some of the things, and other than that, I think TCB data
Mm.
at 7.8 billion, and now they say that that $7 to $9 billion should be their run rate going forward. I think that number with their current revenue at 7 billion would mean that they are adding similar to what they are burning. So the growth rate which the street is building for next year of upwards of 9%, that becomes a bit tricky
Mm.
if you don't have a very strong order book. So those are the things that we got in the call.
Right. And from a geographical, sentiment perspective, taking the US, Europe, and UK into consideration, what do you make out of it? Because commentary has been weak with regards to, certain parts, but clearly they do see some bit of a tailwind, right?
So US is the only place where they see that this the impact of inflation not
Hmm.
happening to their overall deal win performance. So that's the only space. But we know that US has been very tricky in the past cycle as well. So we don't know how it's going to pan out over next coming quarter. Europe, of course, the problem does not seems like ending anytime soon,
Hmm.
and UK is more about better deal win on a relative basis. So, I mean, that is not something which can be expected on a continued basis. So that, and even if that happens, it may not be a very good news for the other peers, especially the smaller peers, if TCS continues to expand the market share. So, US bit tricky, the other two still in pain. That's what we could say from a geo standpoint.
Right. And overall, Rahul, if you see from a deal win perspective, right? Clearly, if you overall the kind of EBIT margin guidance that they are giving versus the deal win perspective, do you think they will be able to achieve the 25% mark?
I mean, they have in past seen improvement even in down cycles, so we can't completely rule out. But if we have to collect
Mm.
the evidences that what can possibly bring that in. So from that point of view, the immediate headwind we is coming from a going back to office kind of a cost.
Hmm.
What we are hearing is that they are going to call out the entire workforce by first week of March back into office, and of course there's a travel cost, there's an on-site
Hmm.
cost. These are the costs which we are going to see only going to add up to the current base, and top of it, the growth may not be as strong as we have
Hmm.
seen in the last fiscal. So both this element kind of suggests that 25% margin looks a bit tricky. Of course, the joker in the pack would remain the INR. Even in this quarter, we have seen that INR depreciation benefited them by 70 bips on the profitability, and they
Hmm.
are already at 24.5%. Let's assume we see some more of it, then 25% is not very off, but we are not expecting that to happen because of the headwind that we have identified. On the contrary, our margin assumption are at 23.3%, which means
Hmm.
further deterioration from this year, full year average of 24%, rather than expecting an uptick, what they were suggesting.
Right. So overall, if you have to compare a TCS to an Infosys, the street expectation was that TCS would actually beat an Infosys in terms of the top line, and this would be the first time in the last 11 to 12 quarters. Taking the numbers that have come in versus the key expectation for an Infosys, do you think that's going to be a possibility?
Yeah, I mean, quarterly, it may happen, but that will not make much of a
Hmm.
view in terms of whether a company is doing better than the other. I think from a last 3 to 4 year perspective, if we take any time period, I think Infi has done better than TCS. So there is a good possibility that Infi may do a similar or maybe slightly better number, because the ask rate now for them in the H2 based on the existing guidance is not quite significant. So there is a possibility that they had a very good H1, and
Hmm.
Q3, Q4 may not be as strong, and they may fall short of what TCS delivered on Q3. But nevertheless, their annual growth is not going to be lower, and we don't see why they would underperform over TCS even in fiscal 24.
Right. Apart from that, Rahul, in terms of the dividend number as well, right? Clearly, it's a record number that we've seen so far in the current financial year because total, when we talk about 75 rupees in for the year, it comes up to almost around 91 rupees, right? So that's something which is a key positive that investors are looking at.
Yeah, I mean, see, these companies in field TCS, they have already identified that they would pay at least 85% of their
Hmm.
free cash flow in form of any payout, be it buyback or dividend. This year, technically, a buyback was not a possibility given the 12-month window that is required. So we were anticipating a bigger dividend. Only thing we would have expected it more in Q4 versus
Hmm.
Q3, like what happened last year. So that was a slightly positive surprise, but I think from an overall payout perspective, it is predefined. So it's just matter of timing or the form, whether it is dividend or buyback or which quarter. But as long as that 85% plus they are able to do, that's a good thing. But given the stock, it is already at closer to 24-25 time P on a FY25 perspective. These kind of numbers, even on an annual basis, are not a significant yield to the investor. But yes, as the multiple school of which has already happened in some of the large cap, some of the stock may start looking good from an dividend yield plus earning growth perspective.
Right. So overall, do you think, the dividend that they've announced currently actually tells you that another buyback, which probably if they had to announce, would have been only possible in the first quarter of 24, right? Taking the cool off period, as you mentioned, actually ends in March. Does this actually negate the announcement of a buyback completely?
Yeah. I mean, there's a good possibility that they would do it, and there's a good likelihood that it should come in Q1. By the time it get implemented, may go into Q2. but the announcement can possibly come with the Q1 earnings.
Right. But Rahul, do you think they would announce a buyback taking into consideration the kind of capex plans that Tata Group as a whole has?
Yeah, I mean, historically, TCS has been one very strong cash generation machine for the Tata Group, and it's just matter of choice whether you do dividend or buyback. And
Hmm.
now with the taxation relevant in both the scenario, it does not make much of a difference from an entity point of view whether you do this or that. So I think that will be a continuous way of paying out back, and it has a far-reaching impact. The buyback is far more prudent that way because it's a perpetual advantage versus dividend is like one-time advantage. So I think that would always remain a key way of doing it. And the size again should be closer to that 2.5 billion to $3 billion, or let's say 20,000 crore, give or take, should be the ballpark number that we would expect whenever they announce.
Right. And overall, Rahul, what would your view be on the stock from a valuation perspective as well? Do you think that the markets have already priced in this kind of a number, or is there still headroom for an investor to enter a TCS?
I mean, our number basically expect slightly declining margin and
Hmm.
8% kind of a growth CAGR over next 2 years. So for a 8% growth business, even at 24 P, what it is trading right now, on a 1 year forward basis is a very, very fair ask. So I would say that it is fairly priced. We just had a 2% upside to our target in this earning result, and with a reduced rating, so our view broadly remains intact. And I think once we get a better clarity in the month of April, when some of the other IT peers may call out their clear outlook for FY24, I mean, that would be the first time when probably we would have a
Hmm.
better hang on the next year earnings growth. Then only we may revisit our thought. Till that time, I think we've been one of the first entity to downgrade the sector in the month of March, and our numbers or estimate continues to remain lower than the street for TCS as well as for other peers in the sector.
Right. All right, Rahul. Thank you so much for joining us on the show and sharing those views with regards to a TCS. It's going to be interesting to see how the other large cap peers as well as the mid cap IT counters also perform in this quarter and what the commentary actually means for the coming quarters. Thank you, viewers, for joining in as well.